estate stock you pick. Oberoi Realty is up almost 4% as well, so shining through over there. But all of this began when the Fed decided to announce that they won't be moving on rates this time, but they may do 3 rate cuts in 2024. And of course, they also spoke about the possibility of no recession in the US. So growth has been strong. Taimur Baig, Managing Director and Chief Economist at DBS, joins us now, DBS Group Research. Taimur, thanks a lot for joining in. It's been a bonanza month and bonanza year, right, for the bulls at least. How are you feeling about this whole situation where both global and Indian central bankers could be heading towards a easing of the monetary policy? And what do risk assets look like to you? I mean, does it look like we're going to build on to our gains in the year to come?
Well, it seems to me that cycles just get shorter and shorter. 8 weeks ago, we were nervous about how high rates will go. And today we are looking at global long-term interest rates down by about 100 basis points. These sort of delta, just don't happen in the markets. Never used to happen in the past. But in the last 3-4 years, between the whiplash of QE and QT, we're seeing these sort of volatility over and over again. Today is a day for exuberance, and we have been in this exuberant phase for a while. It may last through the end of the year, but let's keep in mind the cycles are short. So 2 months, 3 months from now, when we have this conversation again, the tone might be very different. That, to me, is the biggest takeaway from the recent developments of the global financial markets. The Fed fell behind the curve on inflation, spooked the markets, at least in 2022, with sizable rate hikes. Early 23, the markets were ready to start pricing in a recession and rate cuts. That all proved to be spectacularly wrong. And now in the last 2 months, again, the views have crystallized around a prolonged rate cut cycle through 2024, 2025, and beyond. And that, of course, if it comes true, would be an unambiguous positive for both developed and emerging markets.
Taimur, afternoon. You know, on 1st of December, Powell had said Fed cut speculation is premature and the central bank is prepared to tighten further if necessary come 13th of December, and we've got a complete U-turn there. So you said, right, markets were proved spectacularly wrong in 2023. What's your view on 2024? Do you think we will get the 3 rate cuts that Fed is projecting right now and a soft landing, or do you differ on that?
No, I think that room has been set for 75 to 100 basis points in rate cut in 2024. Whether it happens in the first quarter of next year, which seems to be the market's view with almost near 100 probability as the way the pricing is right now, or it happens the second half of 2024, might be the only debate we have. The Fed's messaging is a bit schizophrenic. Chair Powell, as you correctly alluded to, 12 days ago had a very different sort of messaging than he has today. When you read the Fed statement, when you read the FOMC guidance from the dot plots, and then you see what Powell said in his press conference, are actually very different messages. The statement is rather neutral. In fact, he doesn't even take rate hikes off the table. Then you have the dot plots, which seem to suggest 75 basis points in rate cut next year. And then there is Chair Powell's press conference where he seemed to think that rate cut can be had because the high levels of real interest rate is a bit too high for his comfort, and it should be brought down as inflation comes down. So very different messaging coming from 3 different parts of Fed communication on the same day. My view is that the market is going to take this in face value from the Fed's mouth, that is Chair Powell's statement, as opposed to what this.
Hi, Taimur. Good afternoon. Nigel on this side. It seems that the bulls, at least here on Dalal Street and the Indian equity markets, they were getting fed up of the Fed. Now it appears that at least that's a little bit behind us. We have to look forward to the RBI. What kind of action are you penciling in with regard to the RBI for 2024 itself? I think they've hiked rates by 250, 300 basis points approximately. What's the trajectory out there, Taimur?
Well, it seems to me that the Indian market has enough domestic markers as opposed to constraints or tailwinds coming from the outside. Equity market may need some Fed-related messaging because that creates the avenue for easier fundraising for various Indian companies. But as far as the RBI is concerned, imported inflation has not been the issue. It's the domestic sources of inflation, whether it is coming from food or from broader range of domestically produced goods and services. That's the question. So do we look at global markers as a permission for the RBI to sound dovish? Not quite sure about that yet, because I think the domestic developments with very strong growth and some climate change related food inflation keeps some degree of headache for the RBI. It's too much of a good thing, if you will. We're not talking about the Fed type narrative of whether there's a recession or around that, whether there'll be some stickiness of inflation. We're talking about whether growth is going to be stronger than expected, would weather-related issues lead to food price inflation on the higher side. So I don't think overnight developments necessarily open up avenue for the RBI to sound dovish. They have to keep an eye on the domestic markets.
Absolutely, bang on. You hit the nail on the head, Taimur, because I mean, Morgan Stanley actually put out a report where they said that this is India's 401k moment, right? Referring to how there is suddenly a surge in financialization of household savings, something that we haven't seen for a long time. And that perhaps is the reason why domestic inflows are picking up also in a big way. So thanks a lot for joining in and putting all of that into perspective for us. We appreciate your time and thoughts here on the channel. Well, for now, looking exceptionally good. There hasn't been any give up on the gains or let up on the gains just yet. We'll take a quick break. On the other side, we have an exclusive conversation lined up with Prashant Khemka. He's the founder of White Oak Capital Management. That comes up in just a bit.
CNBC TV 18, embarking on a quarter century of excellence.
Thank you for watching CNBC TV 18. For all the latest news and updates, do follow us on our social media platforms.